Shiba Inu has gone quiet. The wild price swings that defined the last several weeks have faded, and the token is now sitting inside one of the tightest trading windows it has seen in months. When volatility compresses this hard, what follows is usually anything but calm. This content is provided for informational purposes only and should not be considered financial advice. Market conditions can change over time. On February 18, 2026, Shiba Inu is trading at approximately 650 units, stuck inside a narrow 24-hour band that has barely moved between 644 on the low end and 658 on the upper side. That kind of compression tells a very specific story. It means that buyers and sellers have reached a temporary standoff. Neither side is willing to push aggressively, and the result is a market that feels almost frozen. According to a detailed technical breakdown published today, the token has been unable to clear the 658 unit mark despite multiple intraday attempts, and each push higher has been followed by a small retreat back toward the middle of the range. A separate analysis confirmed that daily candle bodies have been shrinking steadily, which is a classic sign that momentum is draining out of the market. Volume has cooled off noticeably as well, reinforcing the idea that traders on both sides are choosing to sit this period out rather than commit fresh capital. As per market data, the total value of the token stands near $3.87 billion, with roughly 589 trillion tokens in circulation and daily trading volume around $135 million. That volume figure is worth paying attention to because it has dropped meaningfully compared to the spike seen during the crash to the cycle low earlier this month. Lower volume during a consolidation phase is not unusual, but it does confirm that neither new buyers nor aggressive sellers are entering the picture at this stage. The broader picture adds important context. This consolidation phase comes after a meaningful bounce from the February 6 cycle low of 500 units, which was the lowest the token had traded since 2023. From that bottom, the price recovered roughly 31% before stalling near current levels. According to reports, the weekly chart still shows a gain of around 11.7%, but on a daily basis, the energy behind that recovery appears to be running thin. The token is ranked number 33 on the global market cap table, and over the past 7 days, it has underperformed the broader crypto market, which posted a modest gain while Shiba Inu moved sideways. That relative weakness matters because it shows a token is not keeping pace even as Bitcoin and other large cap assets attempt their own recoveries. The key overhead barrier right now sits at 733 units according to a widely followed directional indicator that is currently flashing a bearish reading. That level has rejected the price on multiple recent attempts, and until it is broken with conviction, any upside move is likely to remain limited. A closer resistance at 700 units represents the first real test for buyers. Analysts note that reclaiming that level would be the first meaningful sign that the recovery from the cycle low has staying power. On the downside, the support zone between 510 and 590 units has held firm during the recent weakness. The 629 unit level in particular has served as a near-term floor, and a daily close below it would be the first sign that the recovery is losing its grip. If the market breaks further below the lower end of that range, the next stop would likely be a retest of the 500 unit level where the February 6 bottom was formed. As per derivatives data, open interest in the token has dropped to just $61 million, a massive decline from the $400 million peak recorded last July. That tells us that speculative positioning has been washing out steadily for months. On top of that, the weighted funding rate has stayed negative since February 5, meaning that traders holding short positions are the ones paying to keep their bets open. In simple terms, the futures market is leaning slightly bearish, even though the spot price has managed to hold above its recent lows. Community trackers show that a capital flow indicator measuring large-scale buying and selling activity was sitting in slightly negative territory as of the latest reading, which suggests that institutional-sized money is not actively flowing into the token right now. When the price rises, but this kind of indicator stays negative, it is typically viewed as a warning that the upward move may lack real conviction behind it. At the same time, momentum readings are sitting squarely in neutral territory with no overbought or oversold conditions present on any major time frame. That absence of extreme readings actually supports a tight range narrative. The market is in a state of balance and it appears content to stay there until something forces a decision. What could break the deadlock? Several catalysts are lined up in the near term. Sources suggest that the central bank's latest meeting minutes are scheduled for release on Wednesday, February 19, and they could shift risk appetite across the entire crypto market, depending on the tone around future rate decisions. Later in the week, a key inflation report arrives on Friday, which measures the spending patterns the central bank watches most closely. A hotter than expected reading would likely strengthen the case for rates staying higher for longer, which tends to pressure speculative assets. A cooler number would have the opposite effect. Beyond macro events, a major regulatory deadline is expected by February 26 concerning an actively managed crypto fund that includes Shiba Inu on its eligibility list, and any signal regarding the token status could inject fresh sentiment into the market. On the supply side, as per on-chain data, trillions of tokens have been moved off exchanges and into private wallets in recent weeks, which reduces the amount of immediately sellable supply on trading platforms. If that trend continues while demand stays flat or increases, the conditions for an upside breakout improve. Sources suggest that the sentiment index across the broader crypto market currently sits deep in the fear zone, with some trackers reading extreme fear at a score between 12 and 15. Historically, extreme fear readings have often coincided with market bottoms rather than tops, but they can also persist for extended periods before any reversal takes hold. In the bullish scenario over the next 2 to 4 weeks, a clean move above 700 units followed by a test of the 733 unit resistance could open the door towards 750 to 800 units if volume returns. In the bearish scenario, a failure to hold 629 unit support could send the price sliding back toward the 510 to 560 zone, with 500 remaining the ultimate floor. The fact that volatility is compressed this tightly means the eventual move, whichever direction it takes, is likely to be sharp and fast. Where do you think the breakout will go? Bullish above 700 or bearish below 600? Share your call in the comments. Shiba Inu is coiled tight. The range is narrow, the volume is thin, and the market is waiting for a spark. When the move comes, it will reward those who are paying attention. Stay subscribed and stay ready. Note once again, this content is provided for informational purposes only and should not be considered financial advice. Market conditions can change over time. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.